back. And this is probably the most sure bet you could possibly make that it cannot continue. I mean, it is impossible to pay off any of the interest on these bonds, even at these low interest rates. It's impossible. So anyone that would buy these bonds doesn't, have the conception of basic arithmetic. So that's a fact. So the only way you could default is you actually admit, these bonds won't be paid back, or anyone that's a foreign holder of these bonds won't be paid, and only U.S. citizens will, or who knows what they could come up with. But that's so unlikely. I just barely touch on that idea. The more likely default is they default on the currency, and it's printing it into oblivion. And when that happens, obviously anything associated with the U.S. dollar, be it the dollar bills or $20 bills in their pockets, or the equivalent debt associated with that, and of course a dollar bill is also a debt instrument, will collapse. So you could have $1 million in bonds, or 10 or 20 or billions or trillions, doesn't matter when it goes to zero or near zero. And this is what happened in the Weimar Republic. Now, I'm not predicting it to go quite that way, although it could, but they're living on the razor's edge right now. It's going to take just a small gust of wind to push them off the cliff, as far as I'm concerned. I think we're very near the edge. Am I right or wrong? I know I'm right in the long run. Is it going to happen by the end of the year? Is it going to happen in 2013 or 14? I don't know, but I know I wouldn't touch a bond. You couldn't pay me to take a bond.
I'm just looking at this list of names of people that have made a call like this and been wrong. Bill Gross, Jim Poplava, Jim Rogers, Mark Faber, Peter Schiff. They've all made this call over the past 3 or 4 years, and they've all been wrong. The only guy who's gotten it right, as far as I can tell, is Mike Shedlock, who has been long bonds. But you are stepping out there, David Morgan, and you're planting your flag on this call that now is the time to short bonds. Now, let's talk about